All right. So if you click this video, I'm guessing you are a complete beginner and you are looking to lay the groundwork, start building your foundation for investing in the stock market. And in this video, that's exactly what we're going to do. My name is Tyler, and welcome to the Financial Ties Investing channel. All right. So we're going to hop into our first term here. First, we're going to cover what we're going to cover in this video, and that is what is a stock market, what is a stock, a share, a ticker, an online broker, portfolio, and a bull market versus a bear market. So you can review this right here. And if this right here interests you, you know if this video is for you. If not, see ya. All right. So let's hop into it here. The first one is, what is the stock market? The stock market is essentially a marketplace where people buy and sell their shares, their stock, their ownership in a company. Okay. It's a network of exchanges that this is where stocks are traded. Okay. This is exchanges match buyers and sellers, and there's multiple exchanges in the stock market. And you don't have to really know all of that to get started, but just know that you got to have a broker to access the stock market. Okay. So, why the stock market exists? The stock market exists because companies can raise money essentially. They can offer their stock to the public, and the public, the investors, are allowed to buy those shares and hopefully make a return on their investment. All right. So, what is a stock? A stock is your partial ownership, your little slice of the pie, right? And there's multiple pies out there. There's multiple stocks, multiple companies. And luckily for us here in the US, you're able to have many different flavors of pie, right? I know I love pie. I just got done eating pie. Coincidentally, homemade blueberry. Hmm. It was good. All right. So, what is a share? So, the difference in a share, the share is essentially a measuring unit of a stock. It's a unit of stock, right? Companies divide their stock into many different shares. There's no limit of the amount of shares that they can offer to the public. So your share is one piece of that stock, right? It's your piece of the pie, all right? So, all right. And what is a ticker? A ticker is the ticker symbol is the identifier. Okay, it is how you identify stock. It's the ticker is how stocks are searched and tracked over the brokers. So here's a few examples of that. You have Apple, which is its ticker is AAPL, and Tesla, which its ticker is TSLA. Right, and on this next page, we got some more examples from the Webull app. Right here at the top, we have Roku, and coincidentally, that one is 4 letters, and the name of the company is only 4 letters, so the ticker is Roku. And for Shopify, you have Shop there for Shopify, Cell H for Celsius Holdings. Many of you might be familiar with Celsius or Alani. They actually acquired Alani recently, earlier this year. Elf Beauty. Some people might, well, most of the people are going to be watching this are males, but you probably could find some Elf products in your ladies' bathroom drawer, right? So Chewy, CHWY, you get it. These are the tickers. This is just a screenshot from my Webull app of watch list. And so that brings us to, what is an online broker? Online broker, it is essentially a platform that lets you access the stock market. You can buy and sell stocks. You can track your portfolio. It is where your portfolio lives. It lives on your, with your broker. Of course, you could have more than one broker and still consider that, investments from both brokers could still be your portfolio, I guess. If you want to track it separately like that, I have more than one broker. Here's an example of some brokers. Right here is Charles Schwab, Vanguard, Fidelity, Webull, Robinhood, and Public. And I have experience with four of those brokers, which was Charles Schwab, Fidelity, Webull, and Robinhood. And, I don't have any complaints, but there is one particular that I have a preference towards. And that brings us to a word from my sponsor.
Hey guys, I'm today's sponsor of Financial Ties Investing Channel. So, who doesn't like getting free money? We do. We like the free money. So, go to the description, look at the link. You'll see Webull. You'll get a whole 2% back. If you put $2,000 in, that's $40. $10,000 is $200. You know what you can do with $200? Fill up 4 tanks of gas.
Trying to get a motherfucking sponsorship. All right. Okay. So, what is a portfolio? Portfolio is a collection of all your investments, right? That can include stocks, ETFs, cash, mutual funds, and or bonds. Okay. And you can have your portfolio, like I mentioned, you can have it on multiple brokers. So it's just easier if you have it in one broker. And yeah. So, like, if you hear people saying, "Oh, my portfolio is down," and maybe if you spoke to any young people, they probably don't have portfolios because they're playing the game wrong, right? But if you've probably heard some older gentlemen talk about their portfolios, that when they say that, they just mean after all the pluses and minuses are done, at the end of the day, it was either up or it was down. It was green or it was red. All right. So that brings us to what is a bull market and what is a bear market. So a bull market is when prices generally go up. This is when there's a super high optimism. There's growth in revenue and earnings, and there's just a whole lot of confidence in the economy, and prices generally tend to go up, right? And that would be where you get the analogy of the bull. You can see that the green arrows are going upward. That analogy comes from a bull strikes up, while the opposite is true for the bear, as it strikes down, right? Bear market is when prices generally go down. There's a lot of fear and uncertainty around valuations or the economy, and that is generally accompanied by pullbacks. And it's very important to understand that both of these markets are normal. Both create opportunities, right? Some of the best opportunities are created in a bear market, but investors get scared of the bear markets, and that is what drives all the downfall of the share prices. Is fear. It's just a bunch of fear. So people sell their portfolios. As they lose money, they lose more money, and then they sell, and it's just a cascade effect, right? So that will sum it up. Oh, and I didn't add that here, but I'm going to say, if you've heard the term "buy the dip," they're talking about when prices dip down, buy the dip, and that is a picture of me and the socks that our affiliate bought me. Buy the dip is generally when prices go down. People say buy the dip. You scoop up those shares for cheaper. All right. So that will wrap it up for this video, and I hope you learned something. I will be publishing another video next week, going to continue this series, add a little bit to this beginner, and work our way towards like a more intermediate terms and just terminology and just need to knows, right? So I do appreciate you for sticking around for the end of the video, and I will catch you in the next one. Peace out.